Hi everyone, happy Friday Money Wind Up. Let me ask you a question. How long have you been with your bank? 5 years, 10 years, 20 years? Maybe you've had the same bank since your parents opened your first savings account. And you might think, I've been a loyal customer for years, surely they're looking after me. Well, not necessarily. When it comes to your home loan, loyalty to your bank could actually be costing you thousands of dollars. Banks don't necessarily reward loyalty. We tend to think of loyalty as a good thing, and normally it is. But your relationship with your bank isn't quite the same as your relationship with your favourite hairdresser or your doctor. So banks regularly offer attractive rates, cashback offers, and other incentives to attract new customers. And you'll see them advertised on TV or on the radio. Meanwhile, existing customers can sometimes end up sitting on an older, less competitive interest rate, and it's often called a loyalty tax. And the frustrating part is that unless you ask the question, you may never know you're paying it. So a small rate difference can mean serious money. Let's say you've got a $500,000 home loan. Even a difference in 0.5% can potentially mean thousands of dollars in additional interest over time. And that's the important bit. When we're talking about interest rates, people often think, oh, it's only 0.5%. But you're not paying interest on $500. You're paying it on hundreds of thousands of dollars. Suddenly that little percentage doesn't look quite so little. But I've never had a problem with my bank. I hear it all the time. And that's great. I'm certainly not saying everyone should immediately leave their bank. Your current lender may actually have a fantastic product for you. But here's the distinction. Staying because you've compared your options and your existing loan, it still stacks up, is great. Sensible. Staying simply because you've always been there is something completely different. Because your bank knows something about human behaviour. Changing lenders feels like work, there's paperwork, there are forms, you have to find documents. So plenty of people think, oh, I'll deal with it later. And then another year goes past, and another. Sometimes you don't even need to refinance. Here's something people don't realise. Reviewing your home loan doesn't automatically mean changing lenders. Sometimes your first step can simply be asking your existing lender, is this the best rate you can offer me? You may be surprised by the answer. Your lender may have a better product available, or they may be prepared to review your interest rate. And if they don't, well, now you've got a reason to see what else is available. One thing I would like you to do is, if you're thinking about it, thinking about your interest rate, thinking about your home loan, I'd like you to ring your bank and you ask for a discharge form and a payout figure. And if they don't come back to you within a couple of days and offer you a better rate or ask, why are you leaving? Then maybe they don't want you. Maybe they don't care. But don't compare an interest rate alone. This is also where I want you to be really careful. The lowest advertised rate isn't necessarily the best home loan. You need to consider fees, offset accounts, redraw facilities, fixed versus variable, loan flexibility, and most importantly, whether you actually qualify for that particular loan. There are also costs involved in refinancing, so we need to make sure that the savings justify making the move. Saving $20 a month while spending thousands to refinance isn't much of a victory. Your circumstances may have changed too. Another reason to review your lender is that you've probably changed since you took out that loan. Maybe your income's increased, you've paid off other debts, you've built equity in your house, you've become self-employed, you're separated, or your financial goals are simply different now. The lender that was right for you 5 years ago or 10 years ago doesn't automatically have to be the lender that's right for you today. So when should you review your loan? As a general habit, it's worth reviewing your home loan regularly, and particularly when your fixed rate is ending, your lender changes your rate, your financial circumstances are changed, or you've had that loan sitting there untouched for several years. And a review doesn't mean you have to refinance. Sometimes the best advice is stay where you are. But at least then you're staying because you've made an informed decision, not because nobody's looked at your mortgage since, 2010 or 2019. At Diamondmine, we can compare your current home loan against others. We can look at the options and look at the numbers properly. We'll consider the rate, fees, features, refinancing costs, and potential savings to work out whether changing lenders makes sense. Loyalty is wonderful for family, friends, and your favourite local cafe. But when it comes to your mortgage, make your bank earn it. Have a great weekend. Happy Friday, Money Wind Up.